So welcome back, everyone. We are live on Facebook, and I'm so excited about bringing on Steve, and I almost said Steve,
Yeah, really?
Steve Walsh, and he's the owner of Scout Mortgage. We've been laughing here.
Yeah.
There's so many
good times.
Absolutely. We want to talk a little bit about what's going on in the mortgage industry, but I want to say hi to everybody. So
Hello.
Hi to everybody that's watching us, like us, follow us. We're going to be sharing this right after the show. And I love when we do that because everyone loves that. They do.
They do.
So tell us a little bit about you and yourself and what you do. And today, what we're going to talk. This is what makes this is what makes Steve so funny and so different. He does it so differently.
Well,
Go ahead.
Scout Mortgage, home of the no-cost closing cost mortgage. That's what we always talk about. And you want to know what's hot in mortgage world today. And I'd say about 75% of our pipeline is cash out refinances. That's what a lot of people are doing. In about the second quarter of this year, around May, there was about a 12% jump in consumer credit. For some reason, people just got spend happy with their credit cards. And so there's a lot of outstanding debt. And so, people are using their homes to pay it off. And I know you and I talked about this a couple of weeks ago when we brought this up and we talked about, well, isn't this the problem that occurred in 2008 and in 2005? Yes and no. It was a completely different world back then. Back then you could cash out every ounce of equity in your house, even future equity. We had, people had loans that went above the value of your house. It's not that way anymore. Now they restrict it to 80-85%. So even if you had to sell the house in a hurry, you still have some equity you can get out of it. So it's the world's a little bit safer now. I disagree with some of the regulations the federal government put in place, but I understand why they did it. But it's a safer mortgage world. And so if you have the consumer credit, you're paying, 17, 29%. We see that every day on credit cards. Maybe, getting it down to 4.5% or 5% is not such a bad idea.
Well, every time you come on, you've talked a little bit about how rates change like almost minute by minute.
Second by second, correct.
So, second by second. So explain to them how it works with you, because you could literally have somebody calling you and you're talking about, maybe you're closing a deal and literally something changes and you can literally help them right away. And that's what makes you different. I want to talk about what makes you different.
Well, we're here to help people. So, we can do a float down. So you can lock in a rate because we are nervous. Let's say you're buying a house and you're nervous about the payment. You can lock in the rate. And if the rates go down while we're processing the file, we can float the rate down. That's a real advantage. We can look at different lenders, different programs. That's another advantage. So that's one of the things we do. We can lock your rate and float it down if rates improve during the process. And after you close, a month or two later, something crazy happens in the world and rates plummet again. Well, we can drop your rate again and again at no cost. And that's one of the fun things about the no cost refinance is that you're never really locked in. You're locked into a worst case scenario. So if we can improve your rate for free or we can lower your rate for free, it just makes sense. And so, back when I first started, the first application I ever took was in 1997. It was at 8.25%. And I remember calling her up. I think it was 2 months, 3 months later. And I said, I can get you 7.875. And she was like dancing. Woo! She goes, I never thought I'd get under 8%. And so, and that borrower I took all the way down to probably 3.5%, I think, a few years ago. So, and she never paid for it. We paid for the appraisal, title, underwriting, processing every single time. So every year or two we touch base and drop her rate. And so she locked in at the lowest rate and she didn't pay anything to do it. If she had paid $3,000, $4,000, $5,000 to refinance every time, she would have lost a lot of equity.
But that's what we talk about with you. What makes you really different is that you're the home of the no closing cost mortgage.
Yep.
And they're A+ rated with the Better Business Bureau. They do free consultations all the time. You're 5-star rated everywhere. Everywhere. Everybody has great things to say about them. And their phone number direct, it's 480-607-7906. The website is scoutmortgage.com, and you're going to see their billboards. I've been seeing them pop up everywhere.
Yes.
And I really like them. They're really cool. And you named it Scout Mortgage for a reason, so let's tell them that.
Well, first we were Premier Mortgage Inc., and I remember we went to state banking, and they said there are like 14 Premier Mortgage banks, and so basically they called us unoriginal. So we went back to the drawing board, And I think we saw the National Enquirer or something, and Demi Moore had just had a baby, and it was called Scout. And we're like, what about that? Scout Mortgage. And then we discussed this last week where, what is Scout? We can think of Boy Scouts, Scout, search, all the good, positive imagery that's associated with it. And then we went online and you could buy scoutmortgage.com. So we registered scoutmortgage.com so we could get our URL. So we got that. And, we went with it.
And you know what? That's what you do is you do scout out the best rate for everyone.
Yeah. And that's, gosh, our job was so easy back in 2005. Pretty much all the banks had the same programs and we would just pick a bank and go to them. Nowadays, there are so many different programs available, and around the office, you hear us, okay, who has the best 15-year? This bank. Who has the best 30-year? Who has an ARM? Who has a jumbo? And who's doing construction loans right now? And we have to be like a Walmart. We have to have so many different suppliers just to keep the product, because I don't want to call them weird phone calls. In the old days, they weren't weird, but nowadays they are. It's hard to get, construction loans, nowadays. It's hard to get, certain kind of niche programs, like self-employed borrowers, for instance. That's probably been the biggest change in, the last couple of months, the last couple of weeks.
Listen up to what that is. They're pretty cool. Tell them what it is.
So self-employed borrowers were kicked out of mortgages since 2010, basically. If you were self-employed, good luck, because you needed 2 years of tax returns to get a mortgage. So I had clients who were dentists, who own restaurants, who couldn't get mortgages because they had a lot of legal, legitimate tax write-offs or depreciation expense and all these other things. So what you can do now is you can do a bank statement loan where we take 12 months bank statements, business bank statements, or 24 months, depending on the program, and they look at your income, and let's say you deposited $1 million. Well, they'll give you income of $500,000. They'll take half of it. That program only came out 2 weeks ago. We're still rolling it out, figuring out how to, market it. But it's basically, the door's been open. The door's been shut for so long for self-employed borrowers. We're welcoming them back.
Which is nice.
And that's a big boom because, it is the heart of the U.S. economy. If you're a capitalist and you believe in capitalism, self-employment is a big part of capitalism. Not everyone's going to work for, Honeywell or Intel. There are going to be some people who work, are insurance salesmen or own small restaurants.
More people today are owning their own businesses. They had to. After the crash, a lot of people had to find out what they were going to do. They might have even been fired, or they found out they don't want to be retired.
Right. So those people, so they're coming back to the mortgage world. They can buy a house again, which is kind of nice. And the rates aren't bad. They're in the 6s, which, for a self-employed individual, it's, you got to take what you can get kind of thing. But the fact that we have a loan again is exciting. It's an interest-only product, around 6%. I'm not going to get into exact rates, but it's a decent program. And no loan limits, like they go up to $3 million, something like that, with 20% down, 620 FICO. So it's a good program. It's a viable alternative to what we were seeing self-employed individuals a few years ago were having to buy properties as investment properties or go, meet a guy who, a hard money loan, basically. That was the only option out there. Now, the world's opened up to them again. So it's nice.
I think the world is opened up to many different things. There's a lot of different programs out there. Tell them what the difference is with working with someone like you in a bank.
We're better because a bank only has so just on Friday afternoon, 4:00, I get a phone call. Someone thought they were moving into their house this weekend. They're not. And they were going through a big bank in town and they got declined. And it's just the bank's policy. They don't do X, Y, Z, and I'm like, hang on a second. You can actually use this income. You can use this. Fannie Mae allows it. They said yes, but this bank doesn't. It's called an overlay. The bank has their own. So Fannie Mae, the big funder of all these mortgages, they put a certain list of guidelines out there. Well, banks then put their own criteria on top. Like Fannie Mae might say, we take a 620 FICO score and pick a bank. They might say, well, we don't go below 700 or we don't go below 680. So yeah, this person was caught in a jam. They thought they were moving and they're not. So I told them, tell your realtor, I have it. If he needs to talk to me, have him call me this weekend. Get a 2-week extension on this thing. I'll have it closed in 2 weeks. We got it submitted yesterday, approved today, and we're going to close in a week.
And that's what makes you different, is that you make it happen.
We have options. I have options. If I worked at Wells Fargo, if I worked at a bank,
any other bank,
I would have any bank. Yes, insert bank here. But if I worked at a bank, I have the products that bank offers. I have pretty much access to any bank in the country's programs. And, I get emails every day. Hey, do you have a self-employed borrower only 1 year in business? Yes. Here we have a loan for them. If you have a self-employed borrower who has this situation, we have a loan for them. Retired income, this, somebody living off dividends, we have a loan for them. So it's just all these crazy programs that you're like, who needs that? And then all of a sudden you get an email or a phone call and you're like, I do. So
absolutely.
we have to call them up. So we have to have shelves filled with products right now.
And you do. And that's what's great about you, and that's what makes you
Everybody
different.
has a story. And that's, my God, our first time I was on the show, we talked about that. Everybody has a story.
And everybody does. They're the home of the known closing cost mortgage. We're going to go to a break. When we come back, we're going to talk further a little bit about people's stories. Their number to call direct, it's 480-607-7906. They're A+ rated with the Better Business Bureau. They do free consultations. It's scoutmortgage.com.
That's right.
Welcome back, everyone. We are talking with Steve Walsh. He's the owner of Scout Mortgage, and we've been talking at the break. There's so many different programs that you get so excited. You are so passionate about what you do.
Thank you.
You really are. And you have so many different options. And we were talking a little bit about at the break that everybody does have a different story. And let's talk about that.
Not everyone fits into that perfect little box where they have, they went to college, got a great job out of college, and saved money and are buying a house, or their parents are lending them money buying a house. That's the perfect world.
That was a long time ago when that happened.
Right. And, Congress really changed everything with the Dodd-Frank laws, and they made it really hard to get mortgages. And slowly we're seeing it peeled back a little bit where they've realized they've created a problem. Home ownership's at the lowest level since 1964. That's crazy. We're at a 50-year low for home ownership, yet we have some of the lowest rates in history. Those two shouldn't coexist. So you try to figure out, well, what's missing here? Why is it this way? And it's really the regulation. The pendulum swung too far in the opposite direction. It went from being too loose, too easy, to too tight. And so now when you look at it, they're trying to pull it back a little bit, and banks are trying to find a way for a borrower who has a very successful business but does have write-offs. How do we get this guy a mortgage? We can see he can afford the payment. So how do we do it? So they've found ways to comply with Dodd-Frank's what's called ability to repay and still provide somebody whose tax returns might not look that strong with a loan. So it's getting to be better out there. It's getting better.
It's getting better all the time.
Yeah, 2008 was hell. It was rough. A lot of people, went through that.
Well, we talked about that too at the break, that people, when that happened, it changed everybody's lives. We talked about that. But, and they say that it's better, but it's really
it's not. It's like we had the roaring 90s, I call them, because the economy was pretty good. Money was looser. Banks were looser. And now, they've tightened up so much. People are having problems getting small business loans, getting mortgages. The financing just isn't there. So it's a tougher ride out there, but the economy's slowly getting better.
Well, and you're the home of the closing cost mortgage. You want to tell them about that?
Yeah, we pay for your appraisal and your title, underwriting, processing, everything. It's pretty straightforward. When you call us, we order the appraisal and we pay for it.
And they're the ones that you call when you've been told that you cannot get a loan. They're the ones that you call because they're going to make it happen for you.
We'll give it a shot. Well, at least we can give you, the banks have a cold way of saying no. So it's
like this.
Yeah,
no.
Exactly. It's, and there's no why or anything. A letter shows up in the mail 2-3 weeks later and says you were declined X, Y, and Z reason. But, sometimes we have to say no, not today. But here you go. If we do these 3 things in 30, 60, 90 days, you're done. So I had a client a year ago who called me up and they listened to everything I said. I forget what I told them, but whatever I told them was really good because they listened and they qualified and they bought the house. They were renting a house and they bought the house they were renting. But I said, here are the things you have to do to get it. Get your credit scores, pay these things off, whatever it was. They did it and they qualified it a couple of months ago. So sometimes you have to come up with a plan. We're really good at that. We're looking at, can we help you today? And if not today, what do we need to do to help you in the future? So that's where the conversation begins. And that's where, the conversation evolves. And maybe we have an intention to go with loan A and maybe your intention, hey, let's go to this loan or this lender. Like it evolves and we can think through the process. Now, we've been doing it for 20 years. It's all we do. So I hope we're good at it.
You are good at it. And
you
know what? You scout out those mortgages for people that, if you've been told no, You don't know. You might just not be. You might just have to change a couple of different things,
right.
but they will help you. And on top of that, they're going to get you the lowest rate. They really are.
And you know, one of the programs I was working on right before I walked in here was, you know, I have a client buying a house with 1.5% down. So you can buy a house with 1.5% down. It isn't a no money down loan, but 1.5% is pretty good. So, you know, there's still low down payment. There are some down payment assistance programs. So there, you know, I don't want to say society, or the government, but we're trying. There is an effort to try and get this home ownership level up for qualified borrowers, for people who really want a house. Because, and student loans right now are a problem. So the government's trying to tweak the way we underwrite files with student loans to make it a little easier to qualify. Because we're seeing some
Can you get loans for student loans?
No, but we have clients trying to buy a house, and we go. They already have a mortgage. It's in their head though. You know, they come out with 100, 200. I've seen.
Yeah, I know.
I've seen 500,000.
I got 2 kids loans. Out of college.
Right. I've seen numbers I didn't think were possible for student loans, and the government's trying to make it easier for them to qualify because that is a problem. This whole, I don't want to say a whole generation, but there's a lot of people missing out on buying a house right now. Because of that, because of student loans.
But it's not just for buying a house. There's many other reasons that you said that you can use your loans for. Go ahead.
Remodeling, paying off credit cards, consolidating debt. And, you know, when you're consolidating debt, what are you doing? You're paying off usually a high balance or a high interest rate credit card. So you're putting it under your mortgage, a possibly tax deductible lower rate. And life sometimes, like I remember in 2008, when the government was trying to figure out how to help people, I wrote an article for the Arizona Republic called Save the Homeowner, Save the World. And the premise was improve their cash flow, lower the rates, lower people's payments. That's what people need. And when you look at credit card debt and credit card balances, if refinancing can improve your cash flow, you should really take a look at it. And paying off a credit card, a car loan, whatever it is, get that cash flow, try and improve it because remember 2008, it is like it came out of nowhere. September 2008, it was bad. And I tell people, you almost got to, you have to stress test your life right now. Make sure if someone loses a job, someone else loses overtime, that you can handle that. You know, build up your savings again, improve your cash flow, take those steps so that you don't walk in one day and the business is closed. The economy's had a 10-year run here. This is one of the longest expansions in history. People can debate whether or not it was a great expansion, but it is one of the largest and longest in history. It only averaged 2% GDP growth, which isn't great, but it has been going pretty well for a while. I sense a pullback coming. I don't know if it's this year, next year, or the year after, but something's, we're going to get rocked. Something's going to happen here. And so make sure you're prepared. Just be prepared.
So
a good scout says that, right? Be
there
prepared.
You go. There
I'll
you
put
go.
That on my billboards
That's
tomorrow.
That's going to be the billboard.
All right.
There
Be
you go.
prepared.
And here's the thing too, be prepared by starting with that conversation with them. They do free consultations. Mm-hmm. They'll talk to you. If they can lower your rate, it makes sense. It just makes sense.
If you can lower your rate for free, it just makes sense. That was that's the slogan that basically founded this company back in 97.
How come you can't say that on your, just that?
If you can lower your rate for free, it just makes sense.
Because state banking,
then you have to put all the little disclosures. Everything you say has to have, pages of disclosures.
Because your world
like
has
interest
changed
rates.
so much.
Right. They crack down on, advertising. And, so it's difficult. And every state is different. So when you get licensed in a different state, one state will allow you to say one thing, another won't. So it's a tough regulatory environment. I'm hoping, there's a congressman out of Texas that's doing some work trying to peel back some of these, some of the things that they went overboard on. So hopefully they can pull that back because I don't think it's really benefiting the consumer.
Well, I'll tell you something. When you do is you benefit the home buyer out there, whether you need to refi for some reason, definitely, and maybe whatever your stories is.
Right. Stories is whatever. We've heard them all and they're crazy ones. And a lot of people recovering from 2008, a lot of people don't fit in that perfect little box. And yes, if you fit in that, here's the thing though, even if you fit in that perfect little box and you want to go to the biggest bank in town, they still don't have great rates. I don't get that. Why people go to the big banks. They're not competitive. I've talked to several people over there that work there and I'm like, if you guys had decent rates, you'd put us out of business. And they're like, yeah, so they don't care. They they don't have great rates
But I
at the
think
big
people
banks.
go with what they
No.
know.
Right,
That's
of
what
course.
they do. They know the name, and so
Right.
they go, or they are
Of
banking
course,
there, so
of
they
course.
walk in there.
Right. It seems simple, but then they have the same process. They think, oh, they know me. It doesn't matter. They have to go through 72 pages of disclosures and all the paperwork too. So there's no real advantage there. The only thing is you're going to end up paying roughly,
You've been doing this for 20 years.
Thanks. Was that a compliment or was that like, what? You didn't retire? Yeah.
No, I have
I
to
know.
cover from that.
I know.
20 years they've been doing it. They know the ins and outs, and that's what makes you different. You have
Right.
all sorts of different ways
Yeah.
that you can get them the lowest rate. They help you with their no closing
Yep.
cost mortgage.
Pay for
They-
the appraisal.
they-
We look at the file. We have access to lenders that are really helpful with programs that kind of understand your situation, whether it's, you co-signed a loan for a family member or, you had a reduction in pay or just weird, crazy stories.
And everybody
so-
has a crazy story.
yeah.
Absolutely.
And if I take your loan to lender A and they say no, I can leverage it out to lender B, C, and D. We'll find someone to do it. Usually we talk to the lender first, tell them your story. We put a nice email together and then we say, here comes the package, and we put it,
and
we
they
say,
make it
"Please,"
happen.
We bring donuts. We do whatever it takes to get your loan closed. So
The number to call them direct, it's 480-607-7906. They're 8+ rated with the Better Business Bureau. 5-star rating anywhere.
Yeah.
What's your final words real quick?
I was going to say, it's funny how every time, whether it's billboards, TV here, we always focus on rate. But, sometimes John and I, the other owner, we talk about our service is amazing. We're really good at what we do. And I say that tongue in cheek, but we're really good. But it's all we do. So you better be good at it.
The number to call them again, it's 480-607-7906. They're 8+ rated with the Better Business Bureau. They do free consultations. Their website is scoutmortgage.com.